Today's video is going to be slightly different. I'm going to be going over my investing portfolio. I'm going to give you my reasoning for why I'm holding these. This video is not here to convince you on buying these stocks. These are just what I own and my reasoning. I think you should definitely listen to everyone, but you should go and do your own research, and then you should make your own decisions based on your own reasoning. I've been in the market now since like 2015-16, and it's taken me a long time to kind of figure out my own strategy. I used to take quite a lot of risks. I've been moving away from some of the riskier things I've been working on, and I think you should definitely not really take my word fully as an advice, but it's not a bad thing to listen to it. That is, if you go and do your research afterwards. Anyways, let's jump into it. I actually don't really believe in diversification as much as a lot of the other people. I think if you can analyze a few okay businesses and just buy them and hold them for the long run, you're gonna make money. I kind of see myself as a long-term dividend investor. The goal is definitely to create a portfolio that will maybe one day I can live off it. When it comes to the stock market, anybody can make money from it. That is, as long as you have patience. You don't day trade. Just you buy a few things that you believe in and just hold them forever. But okay, anyway, so let's go ahead and jump into my first holding. Before we do that, I'll show you how my holdings are. So we have AT&T, Disney, Simon Property, Realty Income, Store Capital, Lockheed Martin, Intel, Facebook, and Google. Some have been more profitable and the others have not. I've been actually collecting some of the profits. I had a lot more gain on Simon Property, but I did re-diversify some of that. The first holding I have is actually AT&T. So I think AT&T is a holding that anyone should own if they're doing kind of a long-term dividend investing. I think they have a nice business model and their PE ratio isn't quite high. What's going to happen if the price drops even more? It's going to become even more undervalued. I think AT&T is kind of undervalued. HBO Max and just HBO in general is having quite a slow growth, but I think HBO compared to these other streaming platforms is slightly more different, where they're actually concentrating more on movies than TV shows. Okay, so AT&T is actually one of my it's my single biggest holding. It's a stock that has not really gone up or down in the past like 10 years if you really look at it. If you look at like 2002, it was like $26. Compared to the other telecommunications companies, AT&T did not go up during COVID. In fact, if you look at the COVID, just like the other holdings, this company also took a shit, but it did not recover. Compared to the other telecom, this is much more fair price. But also its dividend is like almost 7%, so they actually have a very high dividend. And by the way, for those of you who don't know this, dividend is the money you get just by being a shareholder. Like, they actually pay you as if you were working for them. So the next thing I own is Walt Disney. I think Disney is the company I'm the most bullish on. A huge portion of their business is still sleeping. It's just because of COVID, they can't open up Disneyland and all of this. Because of Disney Plus, their stock has really been going up. And I can totally see this company at $400. I think this is a company that's kind of undervalued based on how much growth they're going to have with Disney Plus, and we've already seen that happen. Disney's one of those companies that now has so much stuff. They are now in a place in 2021 where they have beaten their goal of 2025. So they're 5 years ahead of schedule. And now they're having different projections. Now they're saying, look, in 2025, if this continues, we might actually be in 200 million subscribers. And I can totally believe that. You see, Disney doesn't only own Disney Plus, they also own Hulu and ESPN. They're going to be the biggest competitor versus Netflix. It's not that Netflix is gonna slow down at all. If you look at Netflix numbers, they're now at 200. Netflix has created such a brand for itself where it's not going to die off. In fact, it has such a big momentum where there's no slowing it down. But I rather own Disney. When it comes to quantity and quality, Netflix is a company that goes with quantity. Disney, on the other hand, goes through quality. But because of this, when Netflix makes like 900 shows in 1 year, you only hear about a few of them. I thought, like Queen's Gambit, I thought that was very good. I thought The Witcher was very good. I thought Altered Carbon season 1 was really good. I think Lucifer, it was a good thing they picked it up. The rest are all garbage. Disney, they've chosen the quality route. They're coming out with so many shows at this point. It's insane, and they're all quality. And I don't want to cancel my Disney Plus. The Disney Plus is so cheap compared to all these other streaming platforms, where I will probably always have Disney Plus, and I share my account. You see, Hulu also has live TV. Look at that. Live TV with 65 top channels, no cable required. Look at that, Hulu live TV. They have a lot of channels. And then ESPN is another big one. I think a lot of people would want to have this type of TV because of ESPN. I think Disney is gonna be there for a long time. The thing is, these are the prices with most of their business sleeping. What's gonna happen to the stock price when COVID's actually over and they can actually open their parks? This company is undervalued. It has become my second biggest holding. I have a few other ones that are in real estate. Reits are kind of undervalued. It's Simon Property, Realty Income Corp, and then we have Store Capital Corp. These three are my real estate companies. They're REITs that I have. Summer Property is more for malls. I think they have 200 plus locations in the US and outside the US. REITs right now give a very good dividend. This is a company that I was severely bullish on for a long time. If you look at the past 3 years, what do you see? 141 and all of a sudden 46. Why did that happen? It's not just this company. If you go to all of these real estate companies, they kind of have the same drop. I think what happened is that a lot of the investors that own REITs also remember the 2008 collapse. So a part of their decision was also based on emotions and fear of what they used to remember. They still had PTSD from the old days. So when COVID happened, they just sold everything out. And to be honest with you, none of these companies are in trouble. In fact, Simon Property actually bought more real estate during COVID. If you bought this company in the worst time of COVID, you would have doubled your money. I almost doubled my money in this company. And Realty Income Corp is kind of a weird company. This company gives you monthly dividend. It's actually kind of pleasant to see a minimum dividend that you're gonna get every month. I actually once did a presentation for my parents to try to explain some of this stuff, and so I actually brought up Realty Income Corp. They're super diversified, but the main business that they have is they actually rent to other businesses. It's not just this company. There's another one. There's another holding that I exited out of a few months ago. It was called Digital Realty. I'm actually keeping around 50% of my holding in real estate, and there's a reason for that. Once we do go on hyperinflation, real estate's going to have a much higher return compared to the other holdings. I think actually big technology companies are still gonna they're still gonna do fine. Usually bonds are the ones that do the worst during hyperinflation, but everything else is still positive, is in the green. But I think REITs might actually have a bigger return. So I'm going 50% in REITs right now. And in fact, even Michael Burry was talking about how REITs right now are severely undervalued, and in a way it's true. I think technology companies are in a bubble. I think Tesla is in a bubble. I think Apple, Microsoft, Google, all of these are in a bubble, but then so is everything else. In fact, the kebab I ate last night was in a bubble. Okay, the next up is actually Lockheed Martin. Lockheed Martin is a really interesting company because it feels like this company is really built into the American economy. They haven't really been hurt. I think the military, a lot of the research they do is beneficial to the society. That's only bad to technology. Unfortunately, some of these weapons could be used for not just so great things. But even if you look at Norway, we've been talking about wanting to become more peaceful and move away from these weapons and etc. And then you look at Norway, and Norway is one of the biggest players, not the biggest players, but one of the big players in defense. And I think we sell to everyone. The thing is, Russia now has a missile that goes at Mach 27. US has now fallen behind in hypersonic weapons technology. US is too diversified, right? And they're winning in the majority of the defense comp. They are too diversified, so they can't keep up with everything. And for Russia and China to be able to actually compete, they had to kind of become specialize in something, right? So they actually did hypersonic technology much better than the US did. I think it was actually Obama that started the hypersonic projects in the US, but Russia now has these missiles that are operational. They have been operational since 2019, and Russia might very well be selling this to China. But the thing is, these missiles go so fast that plasma actually gets formed in the front of these missiles, so it actually becomes extremely hard to target these. US is now working on hypersonic technology. The closest one we have is Lockheed Martin. They're working on something called the SR-72, which is in concept still until 2023. Sorry. This is going to be the most advanced hypersonic weapon this is actually more of a drone, so it's not really a missile, but this thing does not go 27 Mach. But anyways, Lockheed Martin is one of these companies that these guys have made things that were 40 or 50 years ahead of their time. Like if you look at the Nighthawk, this thing does not look normal. There's a reason Area 51 is known the way it is. This program right here was so secretive that at Area 51 at night they would work on this project, while during the day they would run dummy projects. This shit was not aerodynamic either, so it flew like it was a brick. And there's another thing they had made. Before they made the Nighthawk, they actually made the Lockheed SR-71 Blackbird. This thing was even still ahead of its time. And yeah, look, in 1966, there's some really weird concepts out there, but the best planes are the ones you haven't heard of. And I think that Lockheed Martin has the potential to come up with some even more interesting. They have Skunk Work, which is kind of like an organization within. It's another company within Lockheed Martin that kind of has an unknown amount of budget, and they can kind of come up. Well, let's just say if it wasn't the US working on this stuff, US probably would have started a war to stop a company like that from operating. So the next up is Intel. Intel is one of those companies that is kind of losing the fight when it comes to the actual market and PC, and just they're still using 14 nanometers. That's like a 10-year-old architecture. AMD is on 7 nanometers. And soon they're gonna go even smaller. AMD right now is in a much better place than Intel, but it's insane how Intel is still beating some of these AMD chips with a 10-year-old design. Intel has extremely high potential. Intel's R&D is insane. They spend more money in 1 year than AMD and Nvidia do combined in like 3 years. You think something amazing would come out of this, but so far we have seen nothing. One of the biggest reasons was their CEO. You had an accountant running a technology company, but the problem with Intel was that it has had monopoly market share for such a long time, to a point where they didn't really give a shit. The current CEO of Intel might actually make a difference and actually bring the company around. I think, Intel is one of the only companies that actually make their own chips. But now they're probably going to be outsourcing a bunch of that. I'm kind of bullish on this company, but the biggest reason I bought into it was not because of their PC. It was because of their AI and quantum computing section, which is extremely small. So some might argue that there's no point in actually even investing in it because that is such a small part of their business. If you look at Intel, its prices have not really gone up or down in like 3 years, while if you look at AMD, they have. Also, another thing is Intel gives dividend, but even in 1 year it is just kind of skyrocketed. And then you also have Nvidia, who's done that. I think both AMD and Nvidia are great companies. AMD has to have the same amount of growth that they're having now for the next like 15 years. And for Intel to not do shit for AMD to surpass them. But I don't know. I'm bullish in Intel, but it's not a very big portion of my holding. It's Intel is only like 2.8% of my holding. And then the next up is actually Facebook. So some might argue that Facebook is not a good company. I do agree that they do kind of weird shit, and it's kind of debatable what your definition of good is, but if you look at Facebook's just revenue growth, that is seriously fast. Let's say that the lawsuits go through and they actually get split, well, you would get the stock of the other companies too. The biggest reason I have Facebook is because of VR. I'm not gonna lie, they got Oculus figured out. and they have plans to make Oculus a bigger part of their business. It's insane what they've actually come up with. I used to think that having a VR headset was kind of a niche, but it has so much replay value, which I didn't even believe until I tried it. But I probably will still have to make a video on VR, but the biggest reasons I have Facebook right now is VR. I think they're doing extremely good in VR, but they're also growing very well. I think maybe in a few years, Oculus could be one of the bigger parts of Facebook. And then the other thing I have is Google. Google is it's kind of a weird one. They're kind of an ETF. They have like 6 times more earning per shares than Facebook, which already has 3 times more earning per share than like Apple. Look at the revenue growth. They're really not slowing down. I think if you look at all of these companies, like the top companies, you got like Apple, Microsoft, Amazon, whatnot. Apple's just not really growing the same way anymore. I think they're gonna be fine, but also they're not really introducing anything like new. Maybe it's like a new phone. Maybe it looks just a little bigger or has like 1 or 2 features and it's going to sell. But like the last big thing they released was the Apple Watch. And we haven't really seen anything like that from Apple for a while. On the other hand, Microsoft has been busy at work. I think Microsoft could possibly be one of my favorite companies. And then you have Google and Facebook. They're both currently in the top 6. Well, they have the potential to be in the top 3 within the next 10 years. I've managed to beat the S&P 500 because of the reinvested dividend. Anyways, this was just a video to try to talk about what I actually own and kind of a small explanation why I own these. But I'm an extremely long-term investor. I've tried short-term and I've tried some of these very risky things. The problem with risky investing is that you make a lot of money, but then you lose a lot of money. So like, it's like this. And the amount of input you put in this is just not worth the output you get. And you can get into this point of gambling almost. And there was a small portion of my holdings that I had turned into that. And it was kind of an expensive lesson. Because you're gambling and it's working, you're going to continue doing it. Because you're like, oh, things are going up, so I must be right. Like, this is kind of wrong when you say stocks are going up, I must be right. Stocks are going down, I must be wrong. Currently, I don't own any Bitcoin. I think Bitcoin is kind of overvalued. I was trying to get people to buy Bitcoin back when it was like 3K. But now everyone wants to buy it at like 50 or 60. I don't have any. I think it's overvalued. I think it's a bubble. But bubbles don't always burst. It could go even higher. Look, Bitcoin is overpriced. But then again, so is everything else. It's just, I wouldn't trust all of my money with Bitcoin at these prices. But I would totally trust my money with like Microsoft or Apple or Google or even Disney. Anyways, this was just kind of for me ranting about the shit I own and why I own them. I hope you enjoyed this. I don't know what the hell this was, but I'm probably not gonna make a lot of these videos. I'll probably make one of these like once a year. So this was my 2021 holdings. Peace out.